All right. Welcome, everyone. Thank you for joining us today. I am Annette Iwamoto, Director of the Cuyahoga Human Services Chamber. It's great to be with you alongside our partners of the Human Services Chambers of Franklin County and Hamilton County. We're really pleased to see so many nonprofit leaders, advocates, and community partners registered for what will definitely be a timely and important conversation. We'd love if you could introduce yourselves in the chat, just who you are, what organization you're with, where you're joining us from in Ohio. And before we get into the substance of today's discussion, just a few quick housekeeping notes. The webinar is being recorded and we'll share the recording and slides afterwards. Please use the Q&A function to submit questions at any point, and we'll plan for time at the end to answer them. We may also stop the recording during the Q&A if there's any questions we want to take offline. So with that, I want to just briefly set the stage for where we are. Property taxes are one of the most important funding mechanisms in Ohio. They provide revenue for schools, social services, public safety, libraries, parks, and infrastructure that support thriving communities. In our state, county auditors determine a property's fair market value, how much the property would likely sell for in under normal circumstances. Property taxes are paid on the property's assessed value, which is 35% of the fair market value. These taxes are expressed in mills, with one mill equaling 1,000th of a dollar, 0.001. And some, other important key terms you'll probably hear today. The 20 mil floor guarantees that school districts receive at least 2% of their district's property value in taxes. Inside mills are set by the local government and not subject to voter approval, and outside mills are determined by voter-approved levies specific to a county, city, or school district. This means local residents are deciding to approve a property tax increase to provide additional funding for services and infrastructure they feel are essential to their community. They are making decisions on what they're willing to fund, and these decisions are shaped by state law. And with new legislation and political pressures, there is a lot to keep up with. When property tax policy shifts, it doesn't just affect homeowners and what they're paying, it changes the stability and capacity of the systems that nonprofits operate within every day. So that is why today's conversation is so important, and I'm excited that we have an outstanding group of speakers here to help us understand this landscape from multiple angles. We're grateful for them for spending some time with us, and with that, I'm going to turn it over to Lauren Sands from the Human Services Chamber of Franklin County to introduce our first speaker.
Thank you, Annette. Hi, everyone. I'm Lauren, the Policy Associate at the Human Service Chamber of Franklin County, and it is my pleasure to introduce our first speaker, who is Representative Dontavius Jarrells, State Representative for House District 1. And he'll be giving us an overview of property tax developments at this and his perspective from the State House.
Well, first off, thank you so much, Lauren, and hello to everybody. I see a couple of folks on the call on the webinar that I know personally. For those of you who do not know me, I'm State Representative Dontavius Jarrells. I just so happen to be State Representative for House District 1 here in Central Ohio. I represent the downtown of all of Columbus, and I've been in this role now for 3 terms and have had my fair share of navigating policy that meets people where they are. And so I'm excited to be here to talk to you because we have a lot of work to do when it comes to property taxes. And I'll tell you what, it is no secret that everybody and their mama believes that property taxes are way too high. I think every time I'm out in the community, that is something that I hear from constituents who are struggling. And unfortunately, that struggle has made its way into the State House, where we are supposed to be the ones creating solutions that families can feel. But I'll tell you the truth. I feel like in some of the legislation that I've seen make its way to the governor's desk and is still in committee, it's not necessarily going to make a real difference in addressing this issue. And so we could be doing things like expanding the homestead exemption so that seniors can keep their homes. We could be thinking about circuit breaker tax legislation that allows for those who are struggling to pay their property taxes to get a little reprieve. We could be fairly funding our schools so that we aren't over reliant on property taxes to meet the needs of our young people. But that's not all that's happening in the State House. We've fallen 45th in the nation in the state for K through 12 education. We've fallen 42nd in per capita for state taxation. We've risen the eighth highest property tax in the country. And these are all related. The state has pushed more property taxes on the residential agricultural taxpayers, rising from 46% in 1970s to nearly 70% today. One of the things I learned as being on the finance committee, as we looked at the data and the trend of property taxes, we have, when you think about the 20 billion that we have in property taxes that ultimately could get decided upon with this constitutional resolution that may make its way, income taxes and sales taxes alone do not make up what we all pay in property taxes. And when we think about how we're going to fund a local system, right? The work that you all do every single day, when we're cutting property taxes and we're not being intentional about giving money to our local communities in terms of the local government fund, when we're not thinking strategically about how we're going to support communities, Cleveland, Columbus, Cincinnati, places, rural communities all across the state, so that we have fire and police and human services that meet the needs of people where they are. What's going to happen is these communities are going to put levies on the ballot. And when they can't put levies on the ballot, which some of this legislation that I'll talk about is going to do or is intended to do, that means that those communities are going to have to make very tough decisions as to whether or not those local services exist in their local communities. And so I want to do a quick kind of rundown, and I know the rest of the panelists today are going to kind of do a deeper dive on some of the legislation that's made its way to the governor's desk and things that you all should be considering and looking into. And so I want you to write this down. House Bill 186, which is the capping of the 20 mil. That was basically created to create this inflation cap credit that limits how much unvoted schools and JVSD property tax collection happens on the 20 mil. The reality is over half the Ohioans in this state will not see a difference in their property taxes if this bill passes. When I think about House Bill 129, which is county emergency and substitute levies towards the 20 mil floor, this bill changes how the 20 mil floor is calculated. When I think about House Bill 335, which is already enrolled, so it's already passed into law, the governor signed it. This is a bill that will become law officially, because it's 90 days, in March of this year. It caps the growth in revenue from the inside millage. And essentially, it means some modest tax savings for property owners, but that modest tax savings is about $20, almost about, $120 a year. Very, 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 very small, depending upon where you live. And House Bill 309, which is giving more authority to these budget commissions. And if you know, most of you know what a budget commission is. Essentially, these are the individuals that navigate kind of the levy process. This bill would give them more power to basically reduce voter approved property tax levies. And so in 88 counties, you have 88 different budget commissioners. And essentially what you're basically saying is, we're going to not have a standard across the state, but all of these particular communities can do 88 different ways of how they look at voter approved levies. These are just some of the bills that have made their way into the General Assembly at various levels. There's a number of other bills that aren't even on this list yet that are being considered to try and address property taxes. But here is the truth, and then I'll give it back up to the other panelists. This work requires your voices. You all see on the ground the day-to-day realities of how what was happening in the State House impacts residents. And when we're talking about eliminating levies, when we're talking about doing away with or reducing how much money local communities receive, when we're talking about not funding local governments in a way that ultimately provides you with the support you need to do your jobs, then the conversation then leads to people are left without. Families are going to go hungry. Families are not going to get sheltered. Families are not going to have the supports and tools they need to be their best selves in this state. And so I need your help to tell the story about how property tax discussions that are happening in the state of house will impact you and impact the people you care and you work for every day. And so we have a lot of work to do. There's some wins that I can say when we are still working to try to get some of our bills passed that real make a difference. But we need your voice to help us. And there's some bills that we say we got to stop because it will not make a difference in the lives of people we care about. And so, in all ways, your voices are necessary. And so, I ask you to reach out to my office, to any of our offices, your respective members in the General Assembly, to speak truth to power about why this discussion is too important to not do the right thing for people. And so, thank you to the Human Services Chamber and every single one of you for the work that you do to build an Ohio that we all deserve. And I'm just know that we're doing it together. Thank you.
Thank you so much, Representative Jarrells. Up next, we have Becky Princehorn and Catherine Swartz, partners at Bricker Graydon Wyatt, and they'll be giving us a deep dive on recent and proposed property tax legislation. Just a reminder for everyone, we'll have a Q&A after all of the speakers go.
Okay. Lauren, if you'll work your magic. We are going to tag team here. My charge is to talk and pick up actually a little bit where the representative left off in terms of the landscape now. So Lauren, if you could advance the slides, keep going. Okay. We had, as I think everybody knows, a budget bill that had a record number of changes and a record number of vetoes by the governor. The governor vetoed 67 different aspects of the bill. One of those was overridden, veto number 66. Separate from that, we had 5 bills signed by the governor on December 19th. And we are going to go through each of them individually. So let's start with House Bill 124. As mentioned, this gives more power to the local county auditor. Lauren, we can go ahead. Go ahead from that too. Okay. More power to the local county auditor in terms of monitoring property valuations. And this was an outcry from folks feeling at the local level they knew more than folks at the state. So you're going to see a change there, and my hunch is they're going to be valuing on the low side. Next slide. Then we had House Bill 129. And this is very interesting. House Bill 129 is in some ways a walk back of the veto override that the legislature did in the fall. It walked back, totally eliminating renewal, emergency, and substitute levies to provide for folks continuing to get rollbacks. And Catherine's going to talk a little more about that in a bit. For whatever reason, the legislature really got bent out of shape with the word emergency. So they have redefined emergency to be either a physical disaster or a district in fiscal stress. So this limited renewal emergency and substitute levies are now going to be called fixed sum levies, and emergency levies are going to be limited to tornadoes and going into fiscal emergency. A big bugaboo, more than half the districts in Ohio were at the 20 mil floor. And just a quick tutorial on that. When back in 1976, the last time there was a lot of inflation, it was put into law that there would be reduction factors applied to inflationary growth in the tax base. So put another way, a county would only, from a property tax levy, would only get what it got in the first year plus new construction. Inflation wasn't part of the calculation. However, there was a floor put in for schools and for joint vocational schools since they were so dependent on property taxation for operations. School districts got the 20 mil floor, vocational schools got a 2 mil floor. Next slide. Then, as the representative indicated, there's House Bill 186, which limits increases to an inflation rate so that you, quote unquote, didn't have spikes in property tax bills. Well, if you listen to what I just said, inflation for a voted levy wasn't counted. Your millage would be rolled back. And for some of you, quick note, you might have a voted levy at 2 mils, but 10 years from now, it's only collecting at 0.8. That's because inflation is adjusted via a reduction factor that yields an effective rate. Next slide. House Bill 186. This is very interesting. This is a good thing in terms of what the representative mentioned. One of the things that's been a bugaboo is that there wasn't a distinction between a company that was buying up houses and putting them in real estate investment trusts versus owner-occupied folks. And the feeling was that it's the owner-occupied folks who deserve the real benefit of the credit. So you can see how this is going to phase as time goes on. Next slide. The governor, in signing 186, also canceled the expanded sales tax holiday. That was to pay for this in further inflation adjustment that was in 186. Frankly, it was a way for them to avoid a big constitutional argument about impairment of contract. Next slide. 309, to me, is one of the more scary bills that was signed by the governor. It really puts the decision-making in the hands of the county budget commission. By statute, that is the county auditor, county treasurer, and county prosecuting attorney, all elected officials. And let me repeat that, all elected officials. And the representative is right on. We have some budget commissions who substitute their judgment for the elected fill in the blank. Board of Education, Board of County Commissioners, Board of Township Trustees, because they are now given the authority to determine whether or not something's necessary or whether something's excessive. And that's troubling when you are substituting their judgment for the judgment of elected officials for communities that have voted to have those levies imposed. Next slide. Then there's House Bill 335. That had a real evolution as it was going through the legislature. I want to make sure you understand what inside millage is. This is the unvoted, unvoted millage that's levied year in, year out, and split up between the county, any municipal corporation, school district, and township. It's constitutional, not voted. And the Ohio Constitution provides you can go up to 10 mills in unvoted property taxes. So there too, the effort is to revise the amount of revenue you get from inside millage by an inflationary cap. What is concerning is what happens to what I call the no man's land. What if you are getting additional revenue? You're a county and you're getting additional revenue from your inside millage, but it's not as high as the rate of inflation, but it's higher than what you got in the prior year. Then you have to request that you can access this additional amount of revenue in the no man's land, but it's a quasi-judicial request. You have to document your need for that higher rate. Next slide. On the traditional side of property taxes, and these are millage-based property taxes, school districts are barred from being on the ballot if their carryover is 100% or more of their prior general fund expenditures. For schools, you cannot do a renewal with an increase. Everybody else can do a renewal with an increase, every other local government. And for everybody, they can do a renewal with a decrease. Replacement levies are gone, eliminated for all local governments. Next slide. And I'm going to turn it over to my partner, Catherine.
Good afternoon, everyone. I'm Catherine Swartz. I'm in the Cleveland office of Graydon, Wyatt, and excited to be speaking with all of you today about levy options going forward. And it's going to be a little bit of a repetition here that we've all been talking about limitations on the ability to put a ballot issue on the ballot and to sort of secure operating funds. And as Becky was talking about, we have some additional restrictions on our millage-based levies. And there has been pressure that has been building for several years. House Bill 140 from a few years ago added some additional restrictions that changed ballot language and made it harder for school districts and other local governments to pass ballot initiatives. And these new changes with House Bill, with the biennial budget bill and the additional legislation that is going forward, is going to make it more challenging. While the additional bills that Becky and the Representative Jarrell described go into effect in March, the next election is in May. So in reality, all school districts and local governments putting something on the ballot have to make sure that their legislation and their requirements meet the new requirements, even though we're doing it here in January. The deadline for all elections on the May 5th ballot is February 4th. And this has caused a lot of confusion. The Ohio Department of Taxation puts out forms typically that county auditors use in making their certification. And all of that got delayed this year because of sort of the late breaking legislative changes. And we're trying to, all of us who do this all day, every day, are trying to interpret the new statutory language and make sure that we understand it and that all of the requirements are being met. What this means for local governments is if you used to, take a set of election proceedings, the resolutions that you used previously, and just mark them up and try and do over. That's not going to work going forward, just because there have been a whole host of changes that we're going to discuss. The ballots are also going to look somewhat different, which can also affect the outcome. So we're going to go forward and we're going to dive in a little bit more into these emergency levies, fixed sum levies. Can you advance the slide? So as Becky was describing, we had school districts used emergency levies as somewhat of a way, as a catch-all way to increase funds. And the purposes of these emergency levies used to say for the emergency requirements of a school district or to avoid an operating deficit. Although there was no requirement of what you needed in order to have an emergency levies, there were school districts that had renewal emergency levies that dated back decades. And that really relied on these revenues just for everyday operating purposes, but could also be used for permanent improvements and other things as well. So in school districts that used emergency levies, that millage didn't count towards the 20 mil floor that we've been talking about. And so it was really beneficial for school districts that to stay at the floor, but to also have a voted levy that they could use for different purposes. So this concept has really been, shaken up probably more than any other one, because as Becky was saying, emergency levies were somewhat thrown out the window, and they're being replaced with fixed sum levies. The purpose is being changed to current expenses, and any amount that's raised through these fixed sum levies are going to count towards the 20 mil floor, which will affect overall revenues of many school districts who were otherwise at the floor, and going forward probably will not be because of the way that they're counting the revenue from this levy. The new legislation makes it impossible for school districts to issue new fixed sum levies unless they're in fiscal caution, fiscal watch, fiscal emergency. So if you don't already have one and you're not one of the few school districts who fit into that category, you cannot go ahead and do an emergency levy. However, if you have one, if you had an emergency levy on the books and it's up for renewal, you can renew it. It will count towards the 20 mil floor going forward. You may ask, well, why would you do this? Well, you could take this, the school district could take this option if they want to preserve their rollbacks. These rollbacks that we've discussed with owner-occupied credits, they and other things would be preserved, and also many school districts find that renewal levies are more likely to pass on the ballot rather than the word new. Taxpayers are generally more likely to just approve a renewal, hoping that their taxes are not going to go up. When they see the word new, they look at how much more they're going to have to pay this year over last year, and that becomes more challenging. And we've talked about how the revenue calculation will be included. We can move forward to substitute levies, which Becky also touched on. These are also for schools only, and new levies have been eliminated, and renewals are permitted with a couple of sort of provisos there, and now can only be permitted for up to 5-year terms. Revenues on all of these outstanding levies will going forward be included in the 20 mil or 2 mil floor as well. Next slide, we're going to talk about some other levy options. We're going to talk about incremental and increasing property tax changes. Now, these are levy options that were used by only a very few number of school districts in the state, not going to have as widespread of an effect as the millage base or the fixed sum levy changes that were made. But it probably will, going along with sort of the other changes that have been made, there were school districts who were able to take advantage of renewal with an increase option and also replacement options, which effectively did increase the amount of the levy going forward on renewal. Those have been eliminated going forward for schools and all local governments. And there is also these provisions that limit the school districts who can even issue new current expense levies. And so you've got to make sure that you fit into these categories. So going forward, we're going to talk about, to the next slide, we're going to talk about qualifying levies. And the qualifying levies were a provision that were included in this new legislation that Becky and I have been spending a lot of our time trying to understand. These new requirements include additional certification by the county auditor as part of the election proceeding. And the county auditors now need to certify amounts related to the carryover balance and comparing that to general fund expenditures from the prior fiscal year, both in amount and percentage. So the Ohio Department of Taxation typically has DTE forms that county auditors use, as I was sort of describing earlier. These are the DTE Form 140R, DTE Form 140M. And while school districts were starting to approve election proceedings back in December, these forms weren't updated till January. They still require some additional updates. And this is all going on with a February 4th deadline to get all levy proceedings to boards of elections in order to be on the May 5th ballot. I've been doing this for close to 25 years, have never experienced, sort of as much confusion and just not clarity around what exactly needs to be certified where, and a number of other things. This is, hopefully this will get sorted out very, very clearly, and that we'll have better direction the next time we start this for the November ballots. But start early, make sure that you have, make sure that, this is something that governments need to make sure they're starting early and following all the rules. So moving on to the next two slides, this is an overview of sort of what did the landscape look like before the budget bill, and what does it look like now? And you can see we've gone through and described, I think all of these we've gone through in the prior slides, but discussed what's permitted, what's eliminated, what are my options, and where do I fit, and how does a local government take what they already have outstanding and try to decide what to do next if those are about to expire. Can go on to the next chart. These are more for your information. You can kind of dig into it later after the webinar. And then the final slide on this portion relates to notice of election proceedings. And the forms, there were some very minor changes. The term appraised value was changed to market value. Ballot forms and notices of election need to include amounts and percentage of general fund carryover balances. And there are many changes related to current expense levy that we need to be incorporated as well. We're going to briefly move forward and talk about some other budget bill provisions. The first one is the 15% cap on administrative expenses. There's been a lot of focus on school districts. How much are you spending on administrative expenses? So part of the budget bill included a 15% cap that indicates that the operating budget cannot exceed 15% for administrative salaries and benefits. And a new section, Ohio Revised Code 3315. 063 was put into effect. The last budget bill item that I wanted to discuss talks about forecasts, and school districts used to provide a 5-year forecast. There were some dates and inclusion things that changed here. It's now a 4-year, it's called a submission. So you look at the current budget year plus 3 forecast years. The numbering was kind of confusing because the 5-year forecast used to be the current plus 4. Now it's current plus 3, but we're calling it 4 just to add to the confusion. The dates at which school districts need to submit these have changed as well. The filings move from May and November to February and August. So 2 times a year, school districts need to be filing these forecasts. These forecasts are available on the State Department's website. And now I'm going to turn it back to Becky to discuss a little bit of proposed legislation.
Thanks, Catherine. Next slide. A taxpayer freedom trilogy has been introduced and is still pending. It did encapsulate a variety of things that have already been picked up in these other bills, but the thing that I think is important for you all to know is that it would eliminate existing continuing property taxes after tax year 2029. So it's kind of a double whammy. It would eliminate existing continuing property tax levies and would eliminate any new continuing property tax levy options. So if you were a DD board and working with your county commissioners, you have a couple of levies and you want to get out of a levy cycle, if this passes, you would not be able to do that. You might be able to stretch them out since you can have a levy for 10 years, but you could not have that levy be continuing. There's been a lot of talk about the constitutional amendment effort. Getting the signatures is going to be a tall order. I think most of you know there are requirements about how many signatures you need to have, and you need to have 44 counties hit their respective targets. That is a tall order, and that is why many folks that are trying to get constitutional amendments line up a lot of funders who can fund the effort of getting the signatures in the first place. I don't know that this group of folks has a lot of people that are willing to underwrite the signature gathering process. But never say never. They've got until July 1st, and if they meet that, then it will be on the ballot in November of 2026. The other thing I want to mention to you, and Ryan and I were talking about this prior to the start, even though many of you are nonprofits, you may benefit from a grant from a local government, or you may be in a situation like a DD board where it's a county levy, albeit for DD purposes, and you turn around and contract with private providers to provide the services. So we come at this subject from a variety of ways, and I just wanted to mention that before we close up. Next slide. We have contact information here if you have questions for us. Lauren, how are we doing with the chat? Are there any questions there?
I am not sure that I can see the chat or the Q&A. Does anyone else see the questions?
We don't have any questions at this time.
Okay.
All right.
Yeah, it looked like it was just all people identifying themselves.
Yeah, well, thank you so much, Becky and Catherine, for giving us such a detailed presentation. Up next, we have Ryan Braun, the Director of Community Relations at Hamilton County Developmental Disability Services. And he's going to talk about property taxes and levies at the local level.
Perfect. Thanks, Lauren. Yeah, so my goal here today is to look at what needs to be considered on the local level when you're thinking about these property tax levies. And as Becky just mentioned, this doesn't just affect you if you are the county entity receiving those funds. For example, I'm with the County Board of Developmental Disabilities, and we contract with something like 1,200 different providers. So all of the other levy-funded agencies contract with a lot of other nonprofits so that the funding flows out really into the community to fund a lot of these human services. By way of background, so I work for the County Board of DD. We are supported by a levy that goes on the ballot every 5 years, so I'm working with that pretty regularly. And then in a previous life, I did a lot of campaign consulting and ran a lot of the local human services levies in Southwest Ohio for years before I started here. So I bring a lot of that experience with the human services levies, less so with schools, which are obviously a huge part of this. So I will not acknowledge schools as much as I need to, but it's all part of this same conversation. I want to start a little bit by kind of zooming out and talking about what property taxes fund in Ohio, because I think this is really key. If we want to be able to impact policy, both on the local level and at the state level, we really have to understand what is driving those decisions that our elected officials are making. And then we can figure out how we can pull levers and how we can impact the decisions that they're making based on their motivation. So I think it's helpful to talk about where our taxes go. This is a snapshot from the auditor's website of my house in Cincinnati. Obviously, it varies based on the district and the county and the place that you live in Ohio. But I think what's important to take away here, if you look down through that list of things that are funded with property taxes, it's things that I think most of us would consider valuable social services. So when we're talking about what kind of impact we can have, what kind of relief we can offer property taxpayers, these are the things that are getting reduced. It's not as easy just saying, let's reduce the government waste in our property taxes, because we are using these to fund a lot of really important local services that people in local communities have said are important to them. So that's one piece of it that's important. Another piece is just to recognize the sheer scale of the numbers that we're talking about here. So here in Cincinnati, that represents about $2,100 per $100,000 in property taxes that someone is paying. So if you could remove that little orange or green slice right there is our DD board, that's about $80 million a year that funds services for people with developmental disabilities. If you completely eliminated that, that's just a small piece of that entire pie. So when we're talking about all of the changes at the State House to impact property taxes, short of something structural, this is the way that we have chosen to fund these human services. And when you start cutting that, you're cutting into some really important stuff. And then the last thing that I want to point out on this slide before I go to the next one, the red chunk and the purple chunk, that is the county general fund and the city fund. Those are the two pieces of inside millage, which I know Becky talked about a little bit, and we'll come back to that in a second, because I think that is a critical piece of what drives this conversation on the local level. Those two pieces that are inside millage, those are the only part that don't get voted on. Depending on your county, some of these might be continuing levies, so you might not see them on your ballot regularly. But here in Hamilton County, everything except that city and county portion gets voted on every 5 years. And so your local officials who are deciding what to place on the ballot, they are balancing the needs of everybody in this list on the screen. Which brings me to the next point. So we're talking about where funding goes. Let's talk about how levies actually get on the ballot. There are certainly all these state laws that we just went over and changes to state laws that impact what is even allowed. But at the local level, it's the commissioners who have the authority to place these levies on the ballot, at least when we're talking about human services levies. Schools, libraries, parks, districts, they all have the ability to place their own levies on the ballot. So they are outside of this commissioner realm. But for those of us who are DD, mental health, senior services, children's services, drug treatment levies, all of those kind of things go through the commissioners. And I think what is important to recognize there is that this really is a political process. You as a mental health board can have the most compelling finances and bulletproof projections and everything about your numbers. But at the end of the day, it's the commissioners who get to decide when you go on the ballot. They get to decide how much is asked for. They get to decide the term of the levy. Is it a 5-year levy? Is it a 2-year levy? Is it a 10-year levy? So all of that is subject to the political realities that constrain both the commissioners and everything else locally. And I think that's important for all of us to recognize as we're trying to get levies on the ballot or trying to advocate for levies that fund our services. Recognizing what is driving the commissioners and what realities they're working within is really important. And the other important thing that I think I want to mention on this slide, that last bullet. So the consequences of levy failure, again, this is, I think, somewhat specific to Hamilton County, but if we fund these critical services with levies that have to be renewed regularly, if a levy fails for any reason, you lose all of that funding for the next year. You could put a levy on in November and it fails. If you don't get it, if you get it on immediately in, let's say, February of next year, there's some weird special election and you get it on and pass it, you still miss out on that entire year of collection. So when we talk about what these levies fund, the stakes are really high for these things that we're putting on the ballot. And so I think it's really important to consider what the political realities are, both for the commissioners placing things on the ballot and for the voters that we are then asking to approve these levies. The last piece, I think we've talked around this a lot. I think it's important to kind of talk about the reevaluation process. I'm going to return to that concept of inside and outside millage because I think this drives a lot of the conversation, both at the state house and at the local level. So every property in Ohio gets reassessed, or every property in the county gets reassessed every 6 years. They come out, they do an appraisal, they take a picture, they update your value, and then they update the taxes accordingly. Every 3 years in between those cycles, they do a kind of a mid-cycle update. They don't come out and take pictures and do a full appraisal, but based on current market conditions, they update your property value and they update your taxes accordingly. This is staggered across the state. So every year, a third of counties are getting that full appraisal and a third of counties are getting that mid-cycle update. So what this means for the political conversation is that in a current inflationary environment where property values are continuing to rise, every year, a third of folks across the state are seeing their property taxes go up. And their elected officials at the state level are hearing from that, and their elected officials at the local level are hearing about that. And so that is really what drives some of this conversation. And I think that's some of the reason, at least recently, this is a conversation that continues year in and year out, because every year, a third of the state house is hearing from their representatives or their constituents who are seeing their taxes go up. So that's one piece of it. On the other side of the political pressure that local officials certainly are feeling, as well as the state house, is the concept of inside and outside millage. So we talked about this a little bit. Inside millage is what local jurisdictions can levy without going to the voters. That's that city and county portion. Outside millage is all the stuff that has to be voted on. Inside millage, when your property value goes up, the millage, that rate that you're paying, stays the same. So the dollars that you pay are increasing. So if you have a $100,000 house and you're paying $1 million, and that's $100, if your property is reassessed to be a $200,000 house, you're still paying $1 million, and that's now $200. For outside millage, all the voted levies, if you have a $100,000 house and you're paying $1 million and $100, when the value increases to $200,000, you're still paying a flat $100. So that effective rate that you're paying, that effective millage, is now $500,000. And what that means at the end of the day for all these levy-funded agencies is that they are operating on flat funding, even though local taxpayers are seeing their property taxes go up. And it's hard to communicate that message that just because your property value went up and your taxes went up, that doesn't mean that everybody who receives levy funding has seen a big windfall. And that makes the conversation difficult. So for your local commissioners, when you're trying to talk to them about placing a levy on the ballot, they're hearing on the one hand from local constituents who can't afford their property taxes. And on the other hand, they're hearing from local agencies who can't afford to continue to provide the same services that they provided for the last 5 or 10 years because inflation has really eroded the value of that money. And then lastly, just to kind of drive this home and I think illustrate this point. So this is the DD levy in Hamilton County. We were last on the ballot in 2009 with a new money levy. We've renewed it since then, but we were last on as a new money levy in 2009 at 4.13 mils. Because property values have increased since then and we've only done flat renewals, the effective rate that is being charged to homeowners is now 2.5 mils. And then I think this second slide right here kind of shows what that looks like graphically in terms of purchasing power. That top bar shows that flat funding for the last 15 years. And that bottom bar is that funding adjusted for inflation. So, the big point here is that $1 today in 2025 does not buy you the same thing that $1 bought you in 2010. And so county commissioners are feeling this strain from both their local human services funded agencies as well as from their local taxpayers. And so that is really what is driving a lot of the conversation and what is making it difficult sometimes for levies to get on the ballot with the kind of asks that they need to continue their funding. That's all I have. I tried to be as succinct as I could. So Lauren, I'm going to turn it back over to you.
Thank you so much, Ryan. That was great. So now we will move on to the Q&A section. I saw we have one question in the chat from Diane. If property taxes are difficult for schools to pass, are they going to switch to income taxes? A couple of our schools already have income taxes as a source of revenue.
Catherine and I have done a number of election proceedings for school districts to have an income tax. The challenge that I see with that is you are pitting, especially if it's an earned income tax, you are pitting your seniors who love that because they don't have earned income, right? They have retirement benefits, etc., versus your parents who are likely in the workforce and most likely to support an income tax question. Catherine, do you have anything to add?
I think that's fair. We are seeing somewhat more of them, but it's not that they're, the school districts that have traditionally not used them are often find that they're hard to pass, particularly as a new issue. The other thing, there weren't as many significant changes, from our recent legislation that affected the income taxes, but there are two different bases. There's an all income base and then an earned income base. School districts have to choose one or the other. And just as an FYI, the all income base has been tweaked so that it no longer includes a state income. So that means the overall revenue that those are going to bring in are going to be slightly less. There is a question if all of this legislation passes, a lot of it has already passed, but is there a rough estimate on the amount of revenue that we would be losing as a state? And I think that the main losers are going to be local governments and not the state, but I am not aware of sort of guesstimates on sort of the win-lose, how many, I think that it's an analysis of, as taxpayers, relieving the total taxpayer burden will be decreased, but that also is going to have impacts that are going to affect local governments. And I think it's going to be really hard to quantify, these changes in the elections, and the ballot options, because we won't know what would have passed and what isn't going to pass or going to be on the ballot, and how those changes are going to be affected. Ryan or Becky, do you have anything to add to that?
Thank you for that, Catherine. Our next question is, are there counties in Ohio that use inside millage to make up for some of the difference in the loss of human services support because of inflation, etc., in outside millage?
In my experience, there is authority for a board of county commissioners in the DD example to provide a portion of their inside millage to the DD board. However, I don't know of a single county that does that.
I would agree. That's my understanding. I've heard it as a rumor that could be done, and there could be allocations from the general fund, but I'm not aware of anybody who's actively doing that.
The next question is kind of related. I have heard, if the constitutional amendment were on the ballot and passed, I have heard that creates a $24 billion hole. 24 billion. And the folks that are advancing the constitutional amendment don't have a plan to fund those services. So that said, I think what we're seeing is a shifting of federal responsibilities to the state, and then the state has shifted responsibilities to local government because the state wants to do away with its income tax and the feds want to do away with funding basically human services. So we've got this three-level situation where everybody's getting squeezed. And the thing that some of you may have heard already, is ordinarily in off years, the state does the state budget, and then in the off year, they do a state capital budget, which funds things like higher education and other things. Well, they are now talking about maybe not having one because they're not sure where the state's coffers are going to end up, given the shift from the federal government. And in this move from shifting from the state government to the local governments, if you take away property tax, income tax, and sales tax is really the only things, income tax at the local level and sales tax are the only things left if property taxes go away. So I think that answers those two questions sort of together. And then there's a third one. How does our property tax system square with the rest of the country? Is there a state that does this better? I'm not exactly sure how to answer that. I would say that there are states that do it differently. And I'm thinking of states that rely on things like fossil fuels. There's a reason why some of those states don't have income tax because they rely on fossil fuels and taxes on pipelines and fossil fuel production that fund local and state government. Catherine, I don't know if you have anything to add.
Thing that I would add is, I think it's really hard, to make an apples to apples comparison. There are just so many layers here. But one thing that I see in a lot of other states is particularly on a school district level is that many other states have county school districts. I mean, think about how many school districts we have in Cuyahoga County. And I mean, that's, it would obviously be a major change to say, hey, we're going to have a Cuyahoga County school district. That is not an easy change that we could make. But if we had school districts that were on a much bigger level, that does reduce kind of administrative costs and such when then we have hundreds and hundreds of school districts in the state of Ohio, and the same thing, we just have a lot of local governments, and so there is some repetition, and we've got to fit a property tax model that works with the infrastructure that we have created in the state. So we need to look to states that were similar, and then how have they done it? I mean, we've been on how many decades now with DeRolf and trying to fund the school districts. I mean, we've got a lot of challenges, but I would say that these proposals and the legislation that came out in the budget bill was much more earth-shattering than any other point. I know Becky and I have had this conversation ongoing. I've been practicing close to 25 years. She's been practicing 45 years. And this isn't typical. This is kind of a once in a career shift that we're seeing right now, and it's ongoing. I mean, these changes that were approved December 19th, had such massive shifts and requirements that all affect what we're doing for the May election.
Thank you all. Next question is from Jamie. Given the current political environment, info you have covered in potential governor candidates' approach to property tax, any of you want to make a prediction how this will all look in, let's say, 5 years?
If we only had a crystal ball.
Well, I have to say, I really bristle when candidates of any stripe say that government needs to be run like a business. Government isn't a business. Government exists for the good of the people. And so maybe that's a backwards way of saying I wouldn't trust an Elon Musk candidate for governor. That's not what we need. And I am not saying that we can't work smarter or do things better, but to axe government in the name of cost savings really misses the boat, in my opinion.
Thank you, Becky. So now we're going to stop the recording. If anyone has any questions they want to ask that they do not want to be recorded,